Stocks that had risen earlier on that jobless claims report Thursday, paring back their gains now after that report saying that experimental COVID-19 drug flopped in its first clinical trial. Let's get a check of the markets. We're joined by Brett Sifling. He's an investment advisor at Gerber, Kawasaki, and joins me from Santa Monica, California. Welcome, Brett. Well, those jobless claims eased slightly to 4.4 million last week, but that makes a cumulative total 26.5 million, wiping out all the job gains in that nearly a decade-long period. So, what do you make of that 4.4 million number?
Yeah, I mean, California specifically, where I'm at, had a record number of claims again. And, while we're seeing jobless claims slow down on parts of the U.S., I expect it to actually start picking up again as we start accounting for the gig economy workers as well as the independent contractors who a lot have been hurt from this.
And how soon?
Well, I would expect to see it over the next couple of weeks here, as soon as they're able to actually apply for unemployment via the state's websites. A lot of them have been down. Obviously, we've had a pretty big mess, not just with this unemployment, but also with a lot of the stimulus checks and a lot of the other parts, that the government's trying to give us.
And Brett, why did the stock market rally off that number?
Yeah, it's interesting. We've had a sleuth of bad data, whether that's the unemployment claims or the PMI data. And it's really just the market seems to be shaking it off. And what I think we're seeing is really just the divergence of like the retail economy versus the digital economy. And, it's making me feel decently optimistic.
Well, on the other hand, is the market too giddy? They certainly have bounced back strongly since March 23rd. And you did cite that litany of bad economic data we had, whether it's today's number, whether it's retail sales, falling crude oil prices, among other things, home building, home sales, they've all been bad. And today we got the Purchasing Managers Index falling to 27.4 in April from 40.19 in March.
Yeah, but we're also seeing, records amount of stimulus, and there are a lot of people in the digital economy that are still working. A lot of the young investors, we help Main Street here at Gerber Kawasaki, and I've been helping a lot of these young investors, whether that's with their unemployment claims. Some of them are making a little bit more money than they were before, but a lot of them are just making what their salaries were before, and they're putting that money away, they're saving it, they're investing it, and they're dollar cost averaging. And while we do believe that this is a difficult time in the markets, and we may go back down to the lows. That's definitely a possibility. But the outlook from here is, that the economy is probably going to, open. Social distancing is here to stay for a while, and what that future looks like is still a bit uncertain.
And lastly, you said, well, there's a divide now between the digital economy and the non-digital. So I assume you're perhaps bullish on digital stocks, or any ones in particular you say that investors should be picking up now at these levels.
Definitely. The video game sector is the main one that comes to mind, specifically Activision. It's been a great company. They did a little bit of reorganizing late in 2018 with management, and that, really hurt the stock price. But now they have a huge hit game, Call of Duty Warzone. This is a Fortnite battle royale type game. It's actually crushing the Fortnite numbers. So, it's to be expected with such a popular title like Call of Duty, but, a digital stock like Activision is definitely something that I think could do well. As video games, there's only so much streaming and Netflix that people could watch.
And a stay-at-home stock at that, huh? All right.
Absolutely.
Thanks a lot, Brett, for
A popular title, Fortnite numbers. So battle royale type game, it's actually crushing the Fortnite numbers. So, it's to be expected with such a popular title like Call of Duty, but, a digital stock like Activision is definitely something that I think could do well. As video games, there's only so much streaming and Netflix that people could watch.
and a stay-at-home stock at that, huh? All right.
Absolutely.
Thanks a lot, Brett, for your thoughts on that suggestion. Our thanks to Brett Sifling of Gerber Kawasaki joining us from Santa Monica, California. I'm Fred Katayama, and this is Reuters.